Okay. Tarek has just joined us, I believe.
Hey everyone.
Hey, Tarek. Well, welcome. And just as a brief introduction, I'm really very proud to introduce Tarek Mansour to everyone. He graduated from MIT about 6 years ago or 7 years ago, and he was actually in this class. And so we're really very pleased that he has come as a guest lecturer. And his background, when he left MIT, he joined really the giants of Wall Street, Goldman Sachs, Citadel, and Bridgewater. I'm sure most of you are very familiar with those names. And 3 years ago, he started Kalshi with Luana Lopez Laura, another MIT student, and I think it's been a phenomenal success, especially in the last month. So let me hand it over to Tarek to share his experiences and details on Kalshi.
Well, yeah. Well, first of all, thanks for having me, Peter. Really excited to be back in the class. I know the one I did last year. I think I did the year before that. Maybe I'll talk a little bit about background. Sort of leading to my. So the way I'm thinking about doing this is just I'll talk a little about the story of Kalshi, how we decided to do it, what is the long-term vision, what we're trying to achieve, and then we'll do a little bit of Q&A, and then basically we'll see how it goes from there.
Excuse me, Tarek, just a quick question. Your video isn't on for us. I don't know if you can turn it on. That would be great.
It should be on, but let me check. It's on for me, so it's on Zoom. So let me check. Let me double check. One sec.
Oh, that's great. We can see you now.
Oh, great. Sorry about that. I think I'm in a little bit of a unstable Wi-Fi. So yeah, I mean, maybe I'll talk a little bit about my background. I really like going back to this class because a lot of sort of the interest in financial markets and math, I think, stem from the class. So I was born in California. I grew up in Lebanon. I think one of the things that I basically really enjoyed doing in middle school and high school is I actually really love math. I really like math, and I think it felt like MIT was the right place to go if for someone who basically really loves math. And so got into MIT, and I think the thing I realized is the best application of math is finance. So started working in a number of whether it was like sell side or buy side. So banks like Goldman Sachs. I worked at Citadel. I worked at a few small prop shops. And then the thing I realized is I realized two things. I mean, one, I like trading. I really enjoyed trading, but I realized I prefer sort of building more. I like the sort of notion of building new products, building something new that is sort of tangible. And two, when I was at Goldman, I mean, I think a lot of the things that we've sort of seen is that financial instruments do get developed over time. They take a long period of time, but there is a lot of opportunities to basically develop new things, and there's always needs for a lot of new things. One example in 2016 is that a lot of people were actually trying to get a hedge or an exposure to Brexit, and there weren't really like the right instruments for that. People would use traditional financial instruments like stocks and options and others to get that sort of binary exposure that people were looking for, it was just not perfect. It was a proxy, it was indirect, and it was super expensive because it was what we call over the counter, OTC traded. And so what we thought, and it was kind of really early at the time, it's like, well, what if we have a financial market? So we have a financial market for equities, so that prices equities, one that prices credit, like bonds and so on, one that prices commodities, and we have financial markets for currencies. What if we had a financial market that prices basically any question about the future, any event that is in the horizon that is meaningful economically or socially or culturally? And I think the thing that became very apparent is, one, if such a market were to exist, it has the potential to be the biggest financial market of all. Mostly because it's just broader than anything else that came before it. And two, there were a lot of regulatory issues with that type of market. So basically, historically, the U.S. has made these illegal or unregulated. They haven't let anyone do it. And at the time, we were very naive. We thought, well, that sounds like a problem we could solve, and we just got into it. So we decided to start a company. I didn't go back to Citadel, and so we just decided to start Kalshi. And the premise is really like, it's like, how about, what if we build sort of the first large scale prediction market, and we want to do it as a financial exchange, a regulated financial exchange, so that this can become an asset class that's traded one day by the large hedge funds and institutions and brokers and so on and so forth. And when we first started, it was tough. So I think that well, any company is really tough to start, but I think this was particularly tough because like it was kind of funny story. It was like we called pretty much every single securities/derivatives lawyer in the country and asked them like, hey, we're trying to do this. Like, what can you help us? And the answer was basically like, everybody's sort of like, the range was like either being laughed out of the room all the way to sort of like, hey, this is just not gonna work. Like the CFTC and the regulators just like never wanted to do anything like this. And the reason we kind of kept going is because none of the answers are actually intellectually satisfying. Like there wasn't a kind of a clear answer. Like, okay, why? They're like, well, because of they could be manipulated. I'm like, okay, but like that's solvable. Same way we solve with the stock market. And then the other one is like, well, it could be gambling. I was like, well, why is this gambling? And something like grain futures not. I mean, some people are speculating on grain futures, and sure, some people are hedging on grain futures, but it's the same thing for Brexit. Like a lot of people are exposed to Brexit, and we kept going. We basically got the company regulated. We took 3 years, so we took 2.5 years to 3 to basically get it regulated, and we basically launched the first legal exchange or legal prediction market in the U.S. After that, it took us a very long time. It was a very long journey, but we got the exchange, we got the clearinghouse. Well, we got the exchange at the time, and we got up and running. I think Peter has seen the sort of journey of the company. We started running, and then we grew a lot, and then we had a bunch of sort of like I would say like issues and infighting between us and the federal government, the CFTC, especially this kind of prior administration, which was kind of really tough on financial services and financial innovation. And the big thing that happened is they didn't let us list the election market, which we always believe is kind of one of the biggest markets of all. Basically, we took a very long time to make that decision. It was a very tough one, but we ended up suing the federal government. So we were really one of those sort of first, I would say examples of a regulated company suing its own regulator. It's a very tough and painful decision to make at the time. Obviously, it was the right one now, looking back in retrospect. And we won earlier this fall. And so that win was actually the first time in 100 years that you can actually trade legally on the election in the US. And that opens up a lot of opportunities beyond the election, because what the lawsuit was about is like, it's really expanding the universe of things that are considered financial instruments now. And so where Kalshi is at now, we've grown a lot over the last few years, but definitely the last month. We have we've done over $1 billion of volume in the last month alone, and now kind of as we think about our future expansion plans, we're getting into a number of different categories. Financial services, like just basically like financial markets, sports. We want to basically have a market for every single piece of news that's out there in the world. And we want to, over time, what we're doing is like we're integrating some of the large brokerages where we're going to have, people can come to Kalshi.com to trade the asset, but also if you want to trade the asset from your own brokerage account, like your 401k and your stocks, you will be able to do that on Schwab, Robinhood, Fidelity, and so on. We'll talk a little bit about sort of, kind of finishing the narrative arc, and then I'll talk some of the sort of personal stuff, going from being a student to starting a company and so on. But one of the things that, was interesting throughout the journey is a lot of what it basically ends up taking is just perseverance around basically perseverance towards the goal that you're trying to achieve. I mentioned in the beginning that we were naive when we first started, and in retrospect, I think that was actually one of the best things that, or I'd say one of the best tools that we had, actually being naive, because a lot of the people that like, if we knew how hard it would be, we probably just wouldn't have done it. And there's something to be said about, when you climb a mountain, people tell you, just look at the next step, one step at a time. Don't look at the summit, just because when you look at the summit, you get tired. And I think there's a lot to be said. I think this applies to pretty much anything meaningful in life. I think just doing anything meaningful basically requires a lot of perseverance. The company has raised more than $100 million from a few investors: Sequoia, KKR, Schwab itself, YC, and a bunch of others, Silicon Valley. I think that's about it. I think I covered most things. Peter, I was thinking we could do a little bit of Q&A, and then we can sort of orient the conversation some of the places that the students want to hear about.
Yes, great. Thank you, Tarek. And let's see, with questions, just so Tarek can hear you, we'll hand you a microphone, or we'll pass a microphone to you.
1, 2.
Okay, I don't know where you can see me from. This is like really fascinating. I have a question, which is like, what is the difference between like this and like a betting market? Like, to me, it sounds like the same. Like you're betting on an event, because surely, like if someone wanted to hedge against Brexit, they could just go into a betting market and bet, a certain quantity of money on whether Brexit happens.
If you think so, there's a lot of similarities. I mean, and I would say there's a lot of similarities between betting markets and just any traditional financial market. There's a lot of people that like are speculating or betting or gambling on a lot of markets, including crypto and stocks and really anything. But I think like it's a bit more of a structural difference. Like, first of all, this is an exchange. People are trading against each other. There's no bookie. There's no concept of bookie. And actually, any institution that wants to hedge against Brexit would never do it on a betting market, just because the prices are set by the bookie. They would do it probably with an investment bank, which is what they're doing right now. But the prices are kind of bad at the investment bank. It's like over the counter. You negotiate bilaterally with the investment bank instead of just basically doing it on exchange, where like there's other people that are independently pricing the events, so that you can basically know what the right price is to basically make the transaction at. I think like there are a lot of similarities, and frankly, like I haven't, we don't really discern them quite much. I think like over time the two are converging, and they're gonna end up being one and the same. The fundamental difference, I would say, like from a regulatory or legal perspective, but also like sort of like why is it a financial instrument? Is like, are you trading on natural risks or are you trading on artificial risks, right? So like when you go to a casino and you roll a dice, that's like a risk that you're creating for the purpose of entertainment, whereas Brexit, it's not a risk that you're creating for the purpose of entertainment. That's a risk that exists, that some people have and they're exposed to, and they may want to basically transfer it to someone else. And so that's sort of the delineation of why this is a financial market and why having it on a financial market is appropriate. But yeah, I mean, I think the two main differences, like it is an exchange. Like we have an order book, people are trading it the same way as a stock market, the same way they trade in a stock market. And then two, it's risk that exists, and so people can basically do what they want with that risk, whether they want to get exposed to it more by speculating or they want to get exposed to it less by hedging. It's a great question.
Thanks. Can I just ask a quick follow-up, which is like, and this has just come to my mind, so it may be a silly question, but has there been any like arbitrage opportunities between like the betting markets and this exchange?
Yeah, I mean, well, we're the only legal one in the US, so there's kind of, I mean, in terms of, there's more arbitrage between us and traditional financial assets. So with the election, for example, people were like a lot of hedge funds were arbitraging the election market with other assets like crypto or like S&P and so on. And that we see a lot of that.
Okay, yeah, that makes sense. That's fascinating. Thank you.
I think there's Steven. I don't know if you can give him. I don't know if you can unmute yourself or.
Oh yeah.
Sorry, what's the question?
Can you hear me?
Oh, I see.
Yep.
Yeah. I'm also like interested in careers in trading as well, and I find it fascinating as well. So it's good to hear that you were interested in that and did that as a career. But I was just wondering, how did your experiences working in trading kind of help you to, or if those skills helped you with like what you pursued at Kalshi or not?
I would say like maybe like a few things. So one, I mean, it's always good to get first-hand exposure into how things are done in a market that you're like trying to disrupt. It's like good, like you have to have a reasonably good understanding of how things work. And the thing I'd say is like it's interesting. Like if you stay in an industry for too long, it actually gets a bit harder to disrupt it. You get too conditioned to how things are done, and it gets harder for you to become to have any degree of naivete, which I think is not a very good thing. But I think some degree of experience is good, so that you have like based on understanding of what how your end customer basically thinks about the world and how they use different products and adopt them. The second thing I think is, I would say I learned a lot from the Citadel culture, maybe less from Goldman and some of the others, but Citadel. I really enjoyed working at Citadel. I really like a lot of the aspects of the culture and the way that things are done. And I would say like it was interesting because I think Citadel had sort of this like ultimate version of let's call it like sort of like performance-driven culture. But and what I mean by that is like it's a full meritocracy. It's very little sort of like management layers. Even if you're young, they will give you a lot of ability to sort of take risks and do big things. And they're uniquely fit to do that because in trading, something that's very unique to trading is that you have a P&L. Like it's undeniable whether you're doing well versus not. If you make money, you're doing well. If you're not, you're not. Whereas in a lot of like in tech and others, like there's a lot of politics. Like the boss likes you versus not. I mean, there's just like a lot of noise. And I think we try to kind of bring that to the culture of the company as much as we can. We're very flat as a company. Like we have a lot of people, they're a few years out of college. A lot of them are from MIT. They're running huge chunks of the company already, and with teams and so on. And just because like for us it's very similar. Like if you do well, you basically grow extremely fast within a few months of the company, and if not, then not. And that comes a bit from the trading culture, I would say.
Okay, yeah, that makes sense. Thank you.
I can fill in a question. Hey, Tarek,
Hey,
good to
Jack.
see you back in the class.
Great seeing you.
Good to see you. So can you talk a little bit about your margin requirement and also maybe central clearing? I guess, you have two parties, right, taking the opposite side of a contract. I mean, the payout, let's say, is 100%. They may have paid, a percentage of that total payout. When the market moves, do you require them to post the variation margin, or how do you monitor that?
Yeah. So we are fully cash collateralized right now. So what it means is like people put the money up front for their positions. And then we basically mark to market every day. Actually, we mark to market on a real-time basis. So we do it real time. We are going to introduce leverage next year, I think. And that's going to be pretty interesting. We're thinking about, what kind of our margin model is going to be. And maybe for the class to explain. So in a lot of financial markets, what people consider kind of margin or leverage is like when hedge funds basically buy, let's say, an interest rate future or like S&P future. Let's say they want to buy like $1 million worth of S&P future. They don't put up $1 million with the clearinghouse and the exchange. They put up, let's say, $100,000 or $10,000, which would be 10%, 1% margin. And then as the thing moves over time, the clearinghouse asks you to, if you made a little bit of money, the clearinghouse pays you. And if you lost, the clearinghouse asks you to put up a bit more margin to cover your losses. And it goes like that over time. Kalshi is a simpler model where like we actually ask for 100% upfront. We tell everyone like, hey, give us all the money upfront so that there's no risk in the system. And you're always sure that anything you lose is like what you lose upfront, like what you put up upfront. You cannot lose more than that. Over time, we're going to start introducing leverage, which is like we don't take 100% upfront. And that's what Jake was asking about. And I think it's a complicated thing because regulators are becoming very strict about how we do this. And we need to make sure that nothing like 2008 can happen again. And so there's a lot of like requirements around how this needs to be done. And so we expect to basically just maybe margin like end of next year potentially, and we'll see how that goes. We do have some products where, for example, if there's a lot of strong correlation between two products, we return some collateral to the participant, and we've already started doing some of that. But over time we'll do more and more. Yeah, it's a great question.
Yeah, so I have a question on like kind of how the projections for the company have changed since the election. Like, I assume there's a lot more volume going through Kalshi during that election period. Have you guys been able to retain a lot of that trading volume, or did you see a huge fall off? And like, how did just the election in general change where you see the company going?
Yeah, I mean, I think nothing is like the election. So it's obviously it's super huge, but it's interesting because our volume right now is actually higher than it was in the days leading up to the election. So, and I think that's how exchanges work. Like once you kind of acquire and onboard and open accounts for customers, they kind of retain, they stick. They do other products. Now we're seeing a lot of uptick in crypto. We're seeing a lot of upticks in our economics products. We're seeing uptick on a lot of the politics, like who's going to be in the cabinet, there's kind of all these questions about like what's government going to look like in the next year. And then you have a lot of like, crazy categories like weather. People like come and are very active on sort of daily weather markets and then entertainment markets and so on. So we see a lot of opportunities across all these categories. Yeah, I mean, I don't think it's not going to be the same levels of what we've seen in the kind of 2 days leading up to the election, but I think we're at a much higher level than what we were prior to the election now. It was think of it as like a huge marketing moment for the company. And that enabled sort of the product to go mainstream.
Hey, Tarek, it's Vasily. Yeah, good to see you in class. Yeah.
Great seeing you.
Yeah. A question. So, can you reveal what's the percentage between institutional clients and individuals on Kalshi at the moment?
Right now, I'd say the breakdown of volume is like 30-40% institutional, and the rest is retail. And I expect it to basically go towards 50-50 over time. It's interesting. Like institutions do a lot more volume, but you can charge them less. Whereas retail, like individual customers, they do less volume, but they can be charged much more. And historically, people have seen the business model as being kind of institutional first. Like the large exchanges, like Nasdaq or CME, they're mostly institutional. But I think it was kind of a strategic mistake, and I think they're waking up to it. They're realizing like, oh God, like people on Reddit and Twitter and average people now hold a lot of the power, right? Like, they can decide that a company like Nvidia is going to be worth, a few $1 trillion, like, and that wasn't possible before. Like people are richer now, people are more involved in the financial market, and they're less price sensitive. And so you see companies like Coinbase are doing incredibly well. And yes, they have much less, like Coinbase volume on a yearly basis is around like, I think like 50 to 60 billion. CME's volume is like a quadrillion, right? Like it's just like not even comparable. But Coinbase charges a lot more, right? They charge you a lot more per dollar traded. And I think we see that same balance. And I think that, it's interesting. Like the thing that we see, and I see this trend sort of continuing in the next few years, especially with the Trump administration. Like there's a very strong appetite for new financial markets and new media. Like there's a lot of distrust in the system, both in the sort of Wall Street and financial markets, but also media. People just don't really believe the kind of pundits and the traditional source of authorities. And I think like prediction markets are very uniquely suited to be at the intersection of both. And that's a retail first market. That's like a retail first and then the institutions follow, rather than institution first and then figure out how to get the retail to adopt, essentially. And we're seeing that.
Right. Very interesting. Thank you.
Stephen?
Yeah, I had a question about, because you said that you were trying to also get into sports as well, right? So I was wondering if you plan on offering or similar things to like other sports books and stuff, like traditional bets like money lines and stuff like that, or would it be more of like the more like a broader prediction type sports bets?
We that's a good question. Both basically is the way I put it. I think both. The prediction stuff is the one that's more interesting because that's the one that like people in news thinks about. Like, what are some of the kind of big things that are going to happen in the next few months or years? And then the money line is just like very retentive. It's like people come back and they do it over and over, and then they engage with the product meaningfully in a very consistent way. So I think that the answer is both. We have some regulatory work to do on that front, but the next administration is going to be very favorable. I mean, Trump himself has been quoting our markets a lot. He loves the market. He loves the companies. I think it's going to see a big shift from, an administration that was somewhat anti-financial innovation to an administration that's going to be very, very pro financial innovation and prediction markets specifically.
Okay, yeah, that makes sense.
So, Tarek, I feel another question. I don't know if you can talk about the revenue of the company. Is the company profitable so far, or the revenue model is from a commission model? Just to kind of give students some idea how, why, the investors are interested in owning the company.
The company can be profitable if you want to, but we don't right now. It's oftentimes a little bit of a counterintuitive thing, but I think increasing the growth at this stage is more important than profitability in a lot of cases. And because the reason why exchanges are very popular businesses, they're very hard to set up. It's unbelievably hard to get an exchange up and running. It's just really, really difficult. But when it's up and running and you have liquidity, it's actually one of the best form of businesses. It's some of the most profitable businesses are exchanges, actually. And so right now the strategy is basically like hardcore expansion, just grow mainstream, get people used to the asset. We're making revenue, but it's just like we're reinvesting it all into marketing and growth. And then over time, we're basically like, as we sort of taper and as we get to even larger scale, we're basically like, turn on the profit machine. And the source of revenue is interesting. Like we make money on trading fees, like CME or New York Stock Exchange. You take a fee of every transaction. Like if you put $100 on Kalshi, we take $1 to $2. And then on market making, so we have a separate arm, it's a bit like Citadel market making on this product, and they're already kind of one of the prime market makers. They have competition, so they compete a lot against SIG, which was one of our major partners, and then there's a few other prop shops or like market making, or like a hedge fund in the firm. And then over time, right now we make it all free and open source, but the data is very valuable. We have a lot of very valuable data about like trends and where the world is going, and there's a lot of demand to kind of like get the data, but for now we're just like making it open source. Anyone can use it. Anyone can make use of it. Over time, we can basically capture value in that as well.
Just a follow up on that. You mentioned Citadel, SIG, those market makers. How do you incentivize them to come to Kalshi? And are there any requirements of how tight the bid offer, the spread they need to make when they make market on certain contracts?
Yeah, so no, there are definitely requirements. So I'll give an example. In the election market, they had to be 1 cent spread with $1 million on each side, at least. And it was funny because Jeff Yass, the founder of SIG, actually texted Elon and asked him if he wanted to do a $100 million trade on Kalshi during the election. But then Elon was too concerned of conflict of interest and a bunch of things. And they could have done it with 1 cent. So the spreads were very, very tight. I'm saying this because like they could do up to $100 million within like 1 cent slippage, which is really awesome. And so yes, there are requirements around spread and depth. I think the way we think about like the ecosystem needs to be, or the way that it's structured, you give some incentives at the beginning of markets that after that you basically let it do. And their incentive is basically they're getting flow. They're trading against a bunch of other people, and then they hope to make money market making and doing getting bid-ask spread essentially. And so that's sort of like it. I would say like the structure, and it's pretty common structure in the traditional markets. I think your question is good because the stock exchanges, they do a lot of incentive because stocks, there's a lot of stock markets. There's like a lot of stock exchanges. They're very competitive with each other because of the way that the SEC has set up rules. In the CFTC world, there's not a lot of competition. It's actually very monopolistic in nature. Like each one has their, like CME has the interest rate swaps and S&P. ICE has all the energy stuff. And I think we may be able, I think it looks like we're going to be able to dominate anything that's event related over time.
I'm just intrigued as to how you've gone from like just like working in like a company like Citadel or Goldman to just having this idea of this exchange and like actually just being able to make it. Because to me it seems like even if I had like an idea of like, oh, this would be a great thing to turn into an exchange, like just the idea of actually making that happen seems really like hard to achieve. So like how from from the idea to actually like getting it into a reasonable product, how did you like, what did you have to do? Did you just like have to literally start emailing people in the industry and then start like working your way up? Like how did that work?
Yeah. So yes, that's it. I mean, that's literally it. Like there's one of the I'll say a few things about this, and because I thought about this a lot. So it was a tough decision to leave Citadel. Like when I don't know, I think Peter, you and I had a conversation about this as well. Like I think at the time, like we Citadel pays a lot of money, like even as a first timer, it's like crazy. And so like, I didn't come from a very privileged background. So like I remember I had a conversation with my parents. It's like, hey, I wanted to start this company. They're like, oh, what is it about? I was like, oh, this thing called prediction market. Obviously they had no idea, what I was talking about. And it's like, hey, yeah, I mean, there's another problem. So it's like illegal in the US now. And I want to do this. And they're like, okay. And so like, you have to leave your job. I was like, yeah. And then they obviously got inflamed. They were like, well, what are you talking about? Like, these guys are paying you all this money. Like, what doesn't make any sense? And I think like the thing that pushed us to do it is like, I think I kind of like, some people make decisions based on regret minimization. It's like in 10 years, what path would I regret the most? And I just thought I would regret if I hadn't done it. I just thought like I would be very regretful if I didn't do this, or at least try or give it a shot. And so I just had to do it. And then I really like the idea. I just like really love, I love the idea of basically creating a market where you can price anything and making the world just smarter about the future. So then like, okay, like what did we actually do? The simplest way to describe like what it takes to build a company. So Mark Andreessen has this quote. I forgot if Mark Andreessen or Ben Horowitz, one of the two A16Z guys, about how like when he talks about to a lot of CEOs, he basically has this kind of whole thing about like all the the pretty like the good CEOs usually respond with like, okay, like when he asks them how did you do it, they say, it was like a great strategy, great sort of execution. We had all these great decisions, blah, 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 blah. And then he says the absolute great CEOs, usually their answer is we didn't give up. We just pushed harder than anyone else. And I think there's a lot of truth to that. I really do. Like, because like when you're young, like people say, well, when you're young, you have to wait and get experience to build a company. And there's pros and cons to both. When you're too experienced, I think it's harder to be a little crazier and do like bolder, crazier ideas. But when you're younger, you kind of don't know much about anything, really. Like you don't know how to manage people. You don't know how to, raise money. You don't do any. And so you just have to stumble. Like you just have to kind of like run and fall and then stand back and run and fall again and stand back. And then you do it enough times, then you get used to falling. And then getting used to falling is actually one of the best superpowers you can ever have. Literally, like I think the capacity to kind of fall and stand back up, I think is the single best determinant of the entrepreneurs that go furthest, really. And you can look at it, even you don't need to look at small private companies or big private companies. You can look at public, like massive, large companies, like, you just look at the stock price of Meta and Tesla and see how it goes. It's just not straight to the right. It's just, goes to the shitter for a few years and goes back up, and then it repeats. And every cycle, it goes higher than the prior cycle, and they keep going. So I think that's really what it is. And I kind of when I think about sort of my younger self, like what is the type of advice I would give? I think take more risks. And this is one of the things I learned a lot from my co-founder Luana. Like she's always been risk loving. She never really worried about much. I was more of like a person that would think about optimizing my career and what's the highest expected value path and like, you know, how and what I learned over time from the company and from her, like, it's like, actually, you just need to take more risks. Just taking risks is a very good, is a very good way to live a life, because like, what's the worst case? You fail and then you do it again. I would say number two is like, pick something and just stick with it. Like, just try to pick something. If you don't know what it is yet, that's okay. Like, take a few years to figure that out. But once you feel like you really like and enjoy working on something, you just pick something and just stick with it. Like, just go for it, and you know, have conviction. And usually the results end up being pretty positive. It's a very, very tough road. I mean, Professor Kamtoran can tell you about a lot of the stuff we had to go through to get here. It's a very tough road, but if you have conviction, you're excited about what you're working on, I think you can get very, very far.
That's great. So did you ever set in your mind like essentially like a stop loss where you thought like, right, well, if this person, like, you know, I've asked this many people, if this person says no, maybe it's not actually possible, or did you just never have that in your mind? You just kept going?
You know what I've learned? Not really, basically. I mean, like, definitely not like a people-driven thing. Like what I've learned is like, also a lot is like, don't really listen to authority figures. Like, you'd be surprised by the extent to which like people just don't really know what they're doing. And by people I mean like not like average. I'm talking like the president of the United States, like the Supreme Court judge, Elon Musk, like Mark Zuckerberg. Like people don't really know what they're doing. Really, like everyone is figuring it out on the fly, and it's interesting because like, if anyone had the answer of whether something is going to be a multi-billion-dollar company, sorry about the noise, by the way. If anyone had the answer of if anything was going to be a multi-billion-dollar company, they would just do it. Like, why didn't they just do it? So in a lot of cases, like, you cannot really get the answer from outside. Like, it's interesting. Like, you really can't. You just have it inside you, and you may be wrong. That's a risk. You may be wrong, and you may fail, and it might suck, but that's a risk that you're taking. And but it has to come from within you. It's like, do you have a conviction in this thing, and do you believe it can work one day? And if you do, then go for it.
That's amazing. Thank you so much.
So Tarek, if I could just chime in there, I think what Tarek has is passion, persistence, and energy, and knowing how hard he worked and how inspiring he was. That inspiration led to significant investments from top people in finance. And so, I think it's a testament to those characteristics he mentioned. Also, it's a great benefit to have a good partner. And Laura, really, I think, is a great partner with Tarek, and they've helped each other achieve this. So.
Yeah, no, I really appreciate it. I mean, maybe like my last few kind of parting words, unless there's any other questions. I mean, I think like, kind of, I was still at MIT, and I don't know how many of you are sophomores, freshmen, juniors, seniors, but here's all the stuff I would tell myself if I was still at MIT. Like, I would take more classes like Peter's class and less classes that are sort of purely theoretical and like far removed from many practical things. I would probably study a little less and have a little bit more fun. And I would worry a little bit less about the optimal career paths and just sort of explore what interests me more. It's crazy the extent to which a lot of these things matter much less than you think. And a lot of life is just actually trying things out and seeing what works and just making sure you're excited about the things that you're working on. But yeah, if you guys have any questions, reach me. Just please don't share the email, but it's Tarek@Kalshi.com. My first name at the name of the company.com. Happy to help in any way, shape, or form. But yeah, congrats to you guys making it to MIT and hopefully making it out of MIT. And really excited to be here. Thank you for having me.
Tarek, before you go, I have to ask you this question. What was the most memorable thing you learned from this class when you took it? And do you recall anything, interesting you heard from this class? or advice to
Yeah.
the students? Yeah.
I think there was I really like that every mathematical concept had an application towards finance, and I think that was like a very palpable thing. Essentially, like it was a very very palpable thing. Was like, okay, well, you kind of learning this mathematical concept is pretty cool in and of itself, but then when you apply it to finance, you see there's like actual real practicalities to the whole thing. And I think that stuck with me. Like I think that because a lot of the other classes I was taking was basically mostly pure math or like kind of very removed from industry. Whereas here, I remember one of the projects we had to do was there was this paper we had to write, and I think the one I wrote, it's been a while. It's been like I don't know now, like 6 years, 7 years. But the paper I had to write was. We were running some form of regression. It was kind of a complicated form of regression on now I remember. I wrote a paper that was trying to kind of use reinforcement learning to predict the stock market. And it was like, I think our final paper of the class. And that was pretty hard. I don't think our model worked as you would expect. But it was really interesting just trying. Like, I think that was very useful after when I kind of went into trading, like, people would be talking about like Markov chains and like how they wanted to apply them at Citadel. And I kind of had already done that in the class and had already applied them. And when I used it at Citadel, the PM was like, holy shit, this guy's a genius. I'm like, you don't know anything like that. MIT people do this every day, And that was an ex-MIT guy, by the way, who's now, you should Google him, John Timmermans. He's one of the most successful portfolio managers on Wall Street. He's a G, like, totally. This desk is one of the best performing desks at Citadel. The reports is that apparently they made $2 billion in 2022 alone, and they've been making more since then. And then they were impressed by some of the stuff that I learned in this class that I was applying on the desk. So, and I think this goes to kind of the broader thing that I was mentioning. Like, I think it's just good to be practical, just very good to be practical. Like, get very very smart, but also be practical, because a lot of the world is, and you see it left right, like example. The people that have run the largest company, even the largest hedge funds, are not exactly the smartest. Maybe Jim Simons is like an exception, but they're not exactly the smartest. LTCM blew up, and those were the smartest guys. A lot of the others, like Steve Cohen and some of the others, they're pretty smart, but they're more well-rounded. They're just much more well-rounded than just being the best at math. And I think there's a lot of learning to that.
Great. Thank you.
Well, great. Well, thanks so much for having me, everyone. And hopefully we'll catch up soon.
Great. Thank you very much, Tarek.
Thank you.
But I think his comments about basically having passion and persistence and energy, you can really achieve many things and achieve your dreams. So I do want to encourage you all to take stock of that. And just as a general comment about my career, I started off in academics and then found consulting projects to be very stimulating and engaging, and I decided to leave academics and start my own company, and ended up starting a couple of hedge funds and then doing investment management for 20 years. Then 10 years ago, I had the opportunity to come back to MIT and teach, and I've been savoring that experience as well. So don't be afraid of changes in your life, and changing your paths, and taking risks leads to great opportunities. So hopefully you'll all benefit from that kind of perspective. All right.